Thanks, Galen. I'm very happy to be here, and I can admit that now that I'm here. Like Russ said earlier, I had to convince my board about the hardship nature of this trip. One of those hardships being the dress code for speakers, having to wear business suits in Hawaii. So I grumbled about that a little bit in the office and the travel, etc., but it is really a pleasure to be here, and I thank you for the invitation. So this morning, as I was grumbling again about the business suit, I decided to be very rebellious, and so I decided to wear beachy sandals with my business suit. And so I was feeling pretty good about myself, a little smug, waiting for the elevator. And I get into the elevator, and there's a couple dressed in their beach-going, attire, and they've got all kinds of beach equipment with them. And the young man looked at me and he said, "Ma'am, you must be one of those accountants who's here for that conference." But I will note that none of the speakers so far today have been daring enough to wear sandals with their suits. So today I'd like to talk a little bit about some of the Pcaob priorities and activities that we have going on. Audit quality is one of our big initiatives. We've got many different standards initiatives, and really we're taking a look at the need for ongoing vigilance. Galen mentioned earlier today the need for that. Financial reporting and auditing is highly complex. We're in a dynamic environment, changing economy, risks changing constantly, and accounting and auditing needs to stay firm through all of that. So the various regulators and professional organizations and the Pcaob and all of you have this in mind, and we all have mutual goals. And those mutual goals are to maintain a strong CPA profession that's trusted, credible, valued, and provides a wide range of professional opportunities across industries and sectors with integrity and high standards. And that's why you're all here today in Maui, in a dark room, and it's nice and sunny outside. But we try to achieve these goals through attracting good people to the profession. We've already heard a little about that, and we're going to hear more about that this afternoon. Effectively educating our future professionals, strong certification and licensure programs, good continuing professional education, and effective regulation and oversight. And that really points to the need for all of us to work across organizations for the good of the profession. But most importantly, the dedication of individuals such as each one of you to help achieve these goals through what you do on a regular basis. And anytime I talk to somebody who's been in the profession for any number of years, that person will say, "This is a tremendous profession. It has given me so many opportunities, and I want to figure out how I can give back." And so I'm hoping that today's conference gives you a chance to reflect on that. So before I get started, I need to tell you that the views I express today are mine alone, do not necessarily reflect the views of the board, other board members, or Pcaob staff. And as you can guess, I'm required to say that. Although I do represent 1/5 of the board. We have 5 board members. We are a full-time working board, so we're in there with our sleeves rolled up, overseeing all aspects of Pcaob operations and programs on a daily basis. The board structure is set up in the Sarbanes-Oxley Act, and the Act states that there shall be 2 CPAs and no more than 2 CPAs on the board. So I am one of the CPAs on the board, and Jay Hansen is the other CPA. Interestingly, in the board's 10+ years of operations, this is the first time that the board has ever had 2 CPAs who were former practicing CPAs. The previous CPAs on the board were lawyers who also had their CPAs. So we're going through some transitions, and I will say even Jay and I are as the first CPAs on the board, and taking a look at how things have been approached and how we need to approach things going forward. It is an interesting time in the life of the board when you think about it. 10 years in, the board had a very big mission and needed to get started right away, and was in growth mode. And we like to say that the board is currently in adolescence. And so we're trying to bring the board through adolescence and look to the future. Our mission was set forth in the Sarbanes-Oxley Act of 2002 and then amended through the Dodd-Frank Act. So our mission is to oversee the audits of public companies in order to protect the interests of investors and further the public interest through the preparation of informative, accurate, and independent audit reports. And that language comes straight from the statute. An accountant would not have written it quite that way. I don't think we use the word accurate when we're talking about financial statements, but nonetheless, the language is close enough, and we all know what it means. The Dodd-Frank Act amended the Sarbanes-Oxley Act to add oversight of brokers and dealers to our mission and to our responsibilities, and that was after the Bernie Madoff scandal. And of course, the Sarbanes-Oxley Act was passed after a whole string of corporate scandals on the financial reporting and auditing side. So both of these acts came after serious breakdowns in performance and trust on the part of various types of financial professionals, including, unfortunately, many CPAs. I will tell you, just to give you some scope of what we are overseeing, there are roughly 9,700 issuer audits that we oversee, and those companies have about $26 trillion in global market cap. So I'm glad that when I was with the federal government, I learned how to count to trillions. We also have about 4,400 broker-dealer audits that are currently in our interim inspection program, which is under development. Our Pcaob responsibilities are set forth very clearly in the Sarbanes-Oxley Act, and having been in the government for many years, I will tell you, having a clear mandate is a good advantage. Some agencies do not have a clear mandate, or those mandates are constantly morphed through amendments and other appropriations language and so on, but we have a very clear mandate. It basically follows four principal functions. The first is to register public accounting firms that audit issuers or brokers and dealers, and I just talked about some of the numbers there of those audits. The second is to establish auditing independence, ethics, and quality control standards for registered public accounting firms, and I'll talk a little bit more about that later and how that fits in with other standard setting. Also, we conduct investigations and disciplinary proceedings where there are potential problems, serious violations. So the NASBA folks changed my slides at the last minute. It looks like one of our mission issues is missing here, and that is inspections. I will tell you, this is not a complaint, but I've never had an organization change my slides before, right just as I'm coming up here. So I had 4 on the original set of slides, so I'm hoping that whatever set of slides gets posted goes back to the original. So inspections is really our biggest mission area, and I will talk a bit more about that as well. All right, let me talk a little bit about registered firms and the numbers of those firms. We have almost 2,400 firms registered with the Pcaob. Over 900 of those are foreign-based. Of those firms, we have 9 that issue more than 100 audit reports for publicly traded companies each year, and that's at the bottom of the chart there. And that means that we inspect those 9 firms annually. For the other firms that issue audit reports or that play a substantial role in audits, we inspect them every 3 years. And so you'll see that there's quite an array there and quite a number of firms that do not issue audit reports but are in fact registered with us. In fact, if you look at those numbers, it looks like a very large amount, a very large proportion. Some of those are due to broker-dealer auditors that don't audit issuers. So we've got about 500 or about 480 of those that are in that category. But we've got about 850 firms that do not audit issuers or broker-dealers or play a substantial role in those types of audits. Yet they register with us, they pay their fees, and it's something we need to study. Why do these firms continue to be registered with us? In some cases, there are very legitimate reasons so that they would be prepared and ready to take on these types of clients, but these are big numbers, and we've seen some firms misuse their PCAOB designations, and you'll notice that there's a number of foreign firms, a large percentage are foreign firms, and I think it is unfortunately sometimes easier for firms in those other environments to take advantage of that registration. So for instance, we've seen websites that say things like, we are the first CPA firm in country X to be approved by the PCAOB. Well, registration with the PCAOB does not constitute approval. So we do have a number of registered firms here that we will probably start analyzing who's in that population. The next area is inspections that I want to talk about, and as I mentioned, that's our largest oversight area. Approximately 500 of our around 800 people are inspectors and work in firm inspections. I mentioned earlier we have 9 firms that we inspect annually. We're doing about 220 triennial inspections this year, and so these would be the firms that we look at approximately every 3 years. Sometimes we pay a visit to firms more than every 3 years if we feel that they need that. Out of the 220 of the triennials we're going to look at this year, about 53 of them are foreign firms. And I should mention that some of our inspections of firms with only 1 or 2 issuers, or even up to 5, we do as PCAOB-based inspections. So if it looks like it will be efficient and effective, we allow the firms to send us, their audit documentation in whatever form they'd like, and we'll review it right in our office and hold the inspection that way with lots of telephone calls, et cetera. And I will mention that our broker-dealer program is in an interim stage right now. So we're inspecting broker-dealers, we're giving them feedback, we are issuing summary reports, but not individual reports yet for broker-dealer audits. So some of the common audit deficiency areas that we find across the board in our inspections, revenue recognition. This is common in large audits and small audits. This is a very complex topic in many cases, and still something that auditors are struggling with. Fair value of financial instruments is another common area. The good news there is the number of those findings is decreasing. So we've had an emphasis on that for the past few years. So while that is decreasing, though, we're starting to see other management estimates increase. So I don't know if we're squeezing the balloon here, or if maybe now that we've gotten through some of the financial crisis types of valuations, other management estimates are being impacted. For instance, long-lived assets, impairment of those, and other processes that involve management estimates, goodwill valuation, et cetera. Testing and evaluating of internal controls, we've seen a spike in those findings in the last couple of years. Related party transactions seems to be problematic in the smaller issuers, which isn't a surprise. Fraud risk, and what that means is the auditor says there is risk of fraud and comes to that assessment at the beginning of the audit, but then does not conduct special audit procedures to address that risk. And so it's just kind of this open issue in the audit documentation. And equity financing instruments, especially for the smaller issuers. Again, small companies don't have a lot of cash oftentimes, and so they'll use equity financing as their cash, and these can be very complex transactions, and they're using these sometimes to pay employees and sometimes to pay contractors and others. We also look at quality control areas in a firm. So we look at individual audits and audit documentation, as well as quality control areas. So we look at the management structure and processes in a firm, tone at the top, communication, et cetera. Partner management, including partner evaluation. So to what extent is audit quality considered in a partner's annual evaluation? And we've seen instances where partners with serious audit problems, and where that wasn't taken into account in the evaluation. Client acceptance procedures and policies, you all know that that's very important. And monitoring. In the last year or two, we've been putting extra emphasis on monitoring because that is such an important aspect. After a firm starts getting its policies and procedures together, then monitoring is really the key to keeping those current and effective. Independence, and we still find some problems out there with independence. Most recently in the broker-dealer space, where broker-dealer auditors did not realize that they needed to follow the SEC independence rules as opposed to the AICPA independence rules. So we've been trying to get the word out on that. And then expertise, skepticism, and other systemic issues that come to our attention during the course of the inspection. Now, the quality control issues are reported in Part 2 of the inspection report, and that part of the report is confidential for 12 months, assuming that the firm appropriately remediates those issues. That part of the report will not become public. To the extent that the firm does not satisfactorily remediate, then those pieces of the report do become public. Part 1 of the report is public, and that deals with the deficiencies that we find in individual audits, but we do keep the name of the issuer confidential. I will tell you that the remediation process, we have a staff set up, and they're available by phone, and they work fairly closely with many of the small firms out there, and they'll give guidance on what types of efforts might be acceptable and appropriate. And so many small firms really take advantage of the advice that they get from the remediation staff. Other firms, they never call us, and they may not even respond to the remediation process. So we see a full range of responses out there. We issued a report, and this is something we've been struggling a little bit with, is how to measure, over time, the impact of PCAOB inspections. But we issued a report earlier this year that compares the small firms from the inspections from 2007 through 2010 to the inspections that were done 2004 through 2006. And the reason we took these big, series of years and compared them to each other is because we only look at some of these firms once every 3 years. So we can't compare year to year because each year is a different universe of firms. So we had to take these two groups of years and compare them. And there are some positive trends here. It's not scientific, because some firms dropped out and others were new, but we did see some positive trends. So when we compared the 2007 report to the 2010 report, we saw that 61% of firms in 2007 report had significant deficiencies in Part 1, and that percentage was down to 44% in 2010. And when we look at that same trend when we measure by audits as opposed to firms, we see the trend also in the same direction. So 36% of audits in the 2007 report and 28% of audits in the 2010 report. We then took a look at which firms were in both sets of reports, and we pulled those out, and we found, again, a positive trend in those firms that had both a first inspection and a second inspection across the time period there. So 55% of firms had deficiencies in their first inspection, but only 36% in their second inspection. So I'm hopeful that we can soon publish another one of these reports so we can get 2011, 12, and 13 and see what kind of trends are happening there. So far, I think we're seeing good news in the domestic small firm space. Let's look at the Big Four. These are the overall deficiency rates for the Big Four as well as individually. Between 2011 and 2012, the overall rates you'll see are pretty similar, and those are the ones down there on the right-hand bottom. So 37% of audits that we inspected had Part 1 deficiencies in the 2012 report, and 36% did in the 2011 report. And you'll see some movement, though, between firms. So Deloitte had a significant decrease in its percentage of audits inspected with Part 1 deficiencies. E&Y and KPMG both saw increases, and PwC stayed about the same. Now, I need to tell you that these are not statistically valid percentages. We use a risk-based approach to our inspections. So we look at issuers that are maybe in a risky industry, maybe they've got accounting issues that happen to be risky right now. So we look at industry risk, accounting risk, we look at firm characteristics. Sometimes a firm has a problem office, and we might target audits in that office. Sometimes we'll actually look at the same issuer 2 years in a row if that issuer had so many problems that we think we need to look at it again, and if we did not put that in for our enforcement. So anyway, this is an indicator. Like I said, this is not scientific, and for that reason, we're also looking at audit quality measures. I will tell you that the firms are all putting a tremendous amount of resources and effort into training and into other initiatives to really take a fundamental look at the entire audit process. And so I am very hopeful that we'll see some different results here for the 2014 inspections. So stay tuned there. And at the same time, we are looking at other ways to measure and track quality over time. I'm going to talk a little bit about our auditing standards agenda. I'm not going to go into too much detail because I'm kind of a standards geek, and I could talk about auditing standards all afternoon. And in fact, Chuck Landis and I were reminiscing last night about how we argued about the definitions for significant deficiency and material weakness probably for an entire year or more. Again, I won't try to go into too much detail here. I've included quite a bit of detail on the slides so that you can take those with you or have them as a reference, and I'm happy to answer questions about any of these. But this is the list on the next two slides of our current projects. We recently adopted AS16, Communications with Audit Committees, which really strengthened the standard for communications with audit committees, and we're in the first year of implementation of that right now. We just adopted audits and attestations of SEC-registered brokers and dealers. This is a very big deal. If you do work in the broker-dealer space, you need to become familiar with this now. SEC adopted new rules that impacted the financial reporting and the auditing for brokers and dealers. And our interim inspection program has found serious deficiencies in the audits related to brokers and dealers. So there's a lot of work that needs to be done in this space. So I encourage you to take a look at this. And I've got some slides that, again, I won't go over in detail, but they're here for your reference. I will talk a little bit about Auditor's reporting model because that's our big project out, and the IAASB has a similar proposal out, which I'm sure we will also hear about. We've also got related parties and significant unusual transactions that had been reproposed, and so look soon for an adopting release there. Framework for reorganization of Pcaob auditing standards. We've got the unique situation where in April of 2003, the Pcaob adopted the AICPA standards as interim standards at that time, and then Pcaob started issuing its own sequentially numbered standards, 1 through 17, and they haven't been really put together in a logical format, and so they're becoming a little bit unwieldy, and so this project is to reorganize, to really reorder the standards into a logical ordering that follows the flow of the audit, and I think this will be step one in a much larger project then of actually evaluating the content of the standards and perhaps going to some type of a codification or clarification, but this reorganization is not that. This is step one. Audit transparency, that is something that's been kicking around for a very long time, and this refers to disclosing the partner name and disclosing other firms that have participated in the audit. And look for a reproposal on this before year end. So before before this year end, we do plan to put out a reproposal on both of those issues of transparency. We do have many other active projects that we need to prioritize. I guess first I'll talk about the ones that we plan to put out by March of 2014. Auditors' responsibilities with respect to other accounting firms, individual accountants, and specialists. So in other words, what are the auditor's responsibilities to oversee others who may be participating in the audit? Going concern, we've already heard a little bit about that this morning. Our going concern proposal will be tailored to fit with the accounting proposal. Some of the other active projects where we'll probably in the January timeframe, we'll prioritize these. Quality control standards, in my view, this is a very high priority that we need to go ahead and take care of. Auditing accounting estimates, including fair value measurements and related disclosures, confirmations, and subsequent events. And we've had some talk about the possibility of adding a revenue project as well, but stay tuned, we'll probably revisit this in January. Finally, I want to talk about our concept release on auditor independence, objectivity, and professional skepticism. This was previously known as auditor independence and mandatory audit firm rotation. In June, mandatory audit firm rotation was dropped from the title, and we're focusing this project right now on professional skepticism, audit committee oversight, and audit quality. We really, after 2 years of evaluating this issue, could not find sufficient really justification or reason to put in place a blanket type of requirement for audit firm rotation. But that said, we have a project to interface with audit committees and outreach with them to remind them of their responsibilities for overseeing the auditor and for evaluating audit independence and for thinking about tenure and when would rotation be appropriate. We've also got a professional skepticism alert out there, and as I mentioned, we're doing a lot of outreach to audit committees. So I'm not going to go through the standard slides here in detail, but again, I leave them in the deck so that you have them for your reference in case you are impacted by any of these. I did mention that this broker-dealer is a big deal, and I will touch on these numbers here. When we look at the 783 firms that audit brokers and dealers, you'll see that 363 of them audit only one. So this is an area where there are a lot of changes coming about right now in the financial reporting and auditing, and so there are many firms out there that only audit one, and so this will be a challenge for those firms. And then another 293 that audit between 2 and 5. So again, if you've got, if you do work in this space, this is a big change that is coming, and it's becoming effective basically right now. The auditing standards become effective for periods ending on or after June 2014. So if you've got a December 31st year end, you're still under the AICPA standards, but some of the financial reporting and SEC filing requirements have changed. I want to talk just a little bit about the auditor's reporting model because I'm sure we're going to hear from the IAASB on that as well. So in August, the board issued 2 proposals. One is on the auditor's report, and the other is on the auditor's responsibility regarding other information in documents that contain the auditor's report. And both of these are intended to make the auditor's report more useful and to more clearly convey the auditor's responsibilities. The comment period is through December 13th, 2013, but we have heard that many firms would like to field test this, and so we will likely be reopening the comment period to accept the results of those field tests. And so let me tell you why they want to field test this. So the main points of the proposal, first of all, it would retain the pass-fail model of the opinion, which through the various outreach that we've done, people really value that pass-fail opinion. It's something people understand, and it seems to be a threshold of assurance that is very necessary out there. But we would also add additional information to be reported. One would be the communication of critical audit matters, and I think the international crowd is calling this key audit matters. So there's a K and a C here. So critical audit matters is what we are proposing to require, and I'll talk a little bit about what that means. And we're also adding a proposal for new elements to the auditor's report related to auditor independence, a statement about the auditor's tenure, and that's an interesting point. Does it belong in the audit report, or maybe the audit committee report? And then auditor's responsibility regarding the other information and the auditor's conclusion on that. We've also got enhancements to the report on the standard language for the auditor's responsibility for fraud. So I just want to talk a little bit about critical audit matters, and then we can compare and contrast them to the international standards key audit matters. And it's really interesting, though, how close the two standard-setting boards have come after really studying this from different angles. And so I think we're applying some of the same principles. I think it's good that our proposals differ slightly so that we can get a wide range of input from different constituents, and it'll be an interesting exercise to analyze all of this. But a critical audit matter, and our proposal would require that in audits, the auditor report on critical audit matters, and we believe that most audits would have critical audit matters. So these are matters that involve the most difficult, subjective, or complex auditor judgments, pose the most difficulty to the auditor in obtaining sufficient appropriate audit evidence, or the most difficulty to the auditor in forming an opinion. And so these are things that might be documented in the engagement completion document, communicated to the audit committee, but these are just the tough calls that the auditor had to spend a lot of time on. And the proposal lists a whole range of factors that the auditor should consider. I'm not going to talk in detail about the proposed other information standard. What that does is it changes the standard from read and consider other information to evaluate other information. And then there's some language in there about in the report about the auditor's conclusions there. So I'll be happy to answer other questions about the auditor's reporting model, but this is a drastic change to a very standardized report that's really largely been unchanged for about 70 years. Again, I'm not going to go through all of the details here on the standards, but I wanted to include these for your reference. The board also has investigative authority, so in egregious cases, we can do investigations and bring enforcement proceedings when firms have violated provisions of the Sarbanes-Oxley Act, the rules of the board, professional standards, or provisions of securities laws. And again, these are the very egregious cases that end up going through our enforcement process. And we do coordinate with the state boards on these issues as well as on our inspections issues. So each of you probably get regular correspondences from the Pcaob on these matters. So basically, we look at the egregious failures to follow professional standards. I have a name for these. It's called pervasive failure to audit. Unfortunately, we still see some of these where an audit opinion has been rendered with very little audit work, or with the thought that, well, the auditor will just sort of finish it up later. These are few and far between, but still some of this is out there. We also see failure of firm quality control procedures. So again, egregious examples where a firm's system of quality controls just did not kick in. We find independence violations, as well as what we call failure to cooperate with an inspection or an investigation. And this one just boggles my mind. So failure to cooperate, what this means is that the CPAs lied to our inspectors, or they made up documentation, or when they realized we were coming in, we had one firm that actually held a firm retreat over the weekend to create audit documentation. And so there still is some of this out there. It just boggles my mind that a CPA would do this. So let's say, yes, you might end up with a Part 1 deficiency, or perhaps, well, let's just stick with the Part 1 deficiency, because some of these aren't even the pervasive failure to audit. Some of these are, gee, there was a memo or something missing from the fair value testing area. That may have been a Part 1 deficiency. I remember one case where I'm not even sure that the missing documentation would have even risen to a Part 1 deficiency. But the partner felt the need to create a bunch of audit documentation, lie on the form to the Pcaob where we say, did you change, add, or delete, or change any documentation? No. Yet, these fairly minor things were done. And so why somebody gets into that mindset of doing something so egregious when perhaps the original finding would not have been so serious, it's a problem. So failure to cooperate, actually, there's a full range of issues there. And we do have, unfortunately, a fair number of those in our caseload. So to date, the board has settled or completed adjudication on over 40 disciplinary orders. That is a lagging indicator. That doesn't sound like a lot, but we do have many in the pipeline right now because it generally takes a few years for these things to go through the process, and sometimes it takes a year or two for us to find those. And our sanctions include bars, suspensions, censures, and civil money penalties. So those are the 4 basic mission areas that I just talked about. I want to talk a little bit about our audit quality indicator project because we really want to start the dialogue about audit quality. And we also want to be able to track over time trends and so forth in audit quality. We would use this project also to inform our own regulatory processes and policy-making processes, provide audit committees and others with it's really a common way to discuss auditing, and for audit committees to ask auditors about certain inputs and processes surrounding the audit. Auditing is just highly complex, and I think different audit committees have different levels of knowledge and might be asking different questions out there. We want firms to compete based on audit quality, not based on cost, and that is one of the emphasis that we place when we talk to audit committees. And some audit committees tell us that they believe their job is to get the cheapest audit possible, and other audit committees are very enlightened and say, oh my gosh, they can't even believe people are saying this. So we've got a full range of practice out there, and so we're really trying to steer the conversation toward audit quality because that's what it is all about. I was on a panel with an audit committee member a few weeks back, and whenever I'm before audit committees, I get the full range of response from people, I think based on, where they are on the issues. And so I was getting a little bit of hostility from an audit committee member about the cost of auditing and so on and so forth, and I gave my very eloquent answer. And audit committee chair who was on the panel with me said, if you've ever been sued as an audit committee member, you stop thinking about cost and you start thinking about quality very quickly. And so we're trying to get people to get away from calling the audit a commodity. It is not a commodity. Auditing is highly complex with many judgments, and it is not a commodity. I have heard audit partners refer to the audit as a commodity, and I tell them, well, if that's how you're thinking about it, how do you think your audit committees are thinking about it? So we have really a lot of good hopes for this project. The firms are highly involved with this. The CAQ is also very involved, so I'm hoping that we see some real evolution in the next couple of years about how we talk about and think about auditing in terms of quality. We do plan to publish a concept release around year end, and we're hoping that this is really a significant breakthrough in auditing. But it's going to be a long-term project, so I encourage you to keep your eye open for that and to participate. Another significant publication was our staff audit practice alert on maintaining and applying professional skepticism in audits. And I tell professors and students that this is a must-read document, and I know the Big Four firms are also using it in their training for auditors. And so that was issued on December 4th, 2012. I just want to talk about a couple of our near-term priorities for 2013, and I've already touched on a lot of them. In 2012, after I joined the board, several of us sat down and said, why is everything so chaotic? We really need to take take some time and figure out some near-term priorities because we were dealing with a huge backlog of inspections, a huge backlog of remediation, and just new responsibilities coming in from the broker-dealer, and just seemed like every day there were new problems that we needed to deal with, and not a great way of prioritizing. And I did mention we're a full-time working board, so when you look at these priorities that the board members themselves came up with, it is kind of mind-boggling that this is what we have to deal with. But it is important for us to get past this so that we can look at sustainability and going forward into the future. So the first was improving the timeliness, content, and readability of our inspection reports. That sounds very simple. It has been very difficult, but we are making good progress there. Improving the timeliness of remediation determinations. I mentioned we had quite a backlog there, and we're making good progress. The second part of that is to provide additional information about the Pcaob's remediation process. When we formulated that priority, I was advocating for the word transparency. But I guess that would have implied that maybe we weren't being transparent. But really, we want to provide transparency about our remediation process. What is the criteria? What do we think is important? We've recently sent out to the big 4 firms what that criteria is in our considerations, and we will post that to our website in the near future. But again, the small firms that work with our remediation staff will walk them through the criteria as well. The third bullet there is initiating a project to identify audit quality measures, which I spoke about a little bit. Fourth is to really take a look at our data analysis and how we can look at firms and audit quality and other issues over time. I would love to get to the point where we could issue a State of the Auditing Profession report every year, short, simple, plain English, and timely. But we're starting right now with our analysis and our systems. The fifth one is to enhance the framework for Pcaob's standard-setting process. Again, how do projects get onto our list? How do we prioritize, et cetera? We've got a fairly structured process, but we would like to make it a little more firm and something that is repeatable for the future. One of the problems that I think the board has had in the past is with board members coming and going, and sometimes these projects outlasting board members, new board members come in and sometimes change the priorities. So we want to get a process that is intact and repeatable. And then finally, enhancing our outreach to audit committees, which I talked about a little bit. We are having our next standing advisory group meeting in November, where we're going to talk about some of these priorities. We're also going to talk about establishing a fraud task force, which would be a group perhaps made up of SAG members. We're going to discuss how to formulate this, but to really deal with some of the fraud issues, taking a look at the changes that we've had in practice and standards to date, and what else might need to be done, not only through standards, but also practice and education as well. We're going to talk about audit quality indicators and the auditor's reporting model. So you can see we've got a lot on our plate. We are in the process of really trying to mature the organization and mature some of our processes and take a look at sustainability here going forward for the future. So before I close, I'd like to go ahead and open it up for questions. If anybody has any questions, or maybe you're exhausted after hearing all this.
Thank you very much for a very informative presentation. I'm the CFO of a public company. One of the questions that I get, or perhaps complaints as I interface with peers and also with my own audit firm, is it goes something like this. We're going to implement this piece of work, or we're going to do this, not that it particularly applies to your company, but as a result of the inspection process, we're implementing this across all of our audits with all of our clients. And I just wondered, as a CPA member, familiar with the concept of materiality and applicability and those sorts of things, if there's any effort on the part of the board to address the issue of blanket implementation as opposed to more target implementation where applicable or where needed? Thank you.
Sure, thanks for that difficult question. Well, I want to emphasize two things. First of all, it's up to the firms as to how they respond, how they choose to respond. You know, there are many different ways sometimes to deal with an issue or a potential issue, so it is up to the firms as to how they're going to do that. It's also up to the firms as to how they communicate this to their clients, and frankly, I think sometimes things get lost in translation, intentionally or unintentionally. And we've actually talked to the firms about this because some audit committees have told us, well, our firms have come to us and said, we don't believe this is necessary, but the Pcaob has told us we have to do this. And you know, we say, well, that's not how we operate. And sometimes it's a translation problem in the firm itself. So we might be talking to firm leaders and partners, and we're in agreement, but by the time it gets down to lower level folks, they're not fully understanding the issues, and they may actually be told, you need to do this because of a Pcaob inspection, and then that gets translated over. So we are aware that this type of communication is happening. The other aspect of your question, where a firm says, well, this doesn't apply to you, but you know, we're putting in an across the board, that can also mean different things. That can mean this wasn't a problem on your particular inspection, but we realized maybe we can tighten up our procedures across the board, so your procedures will change this year. So there's a whole lot of different things that could be going on here. And we've been talking to the firms about these issues and audit committees as well, because it doesn't do anybody any good if information is not accurate, or if it's being poorly translated, or in fact if there is a disagreement that never got dealt with and now, you know, certain actions are being taken that otherwise wouldn't be. So we're aware of this issue. I always advise audit committee members and CFOs and others to probe. You know, if you are given an answer that isn't making sense to you on the surface, probe and take it up the line a little bit in the firm to see what kind of answers you can get.
Hi, I'm Harry Parsons from Nevada. As regulators, I have a sort of a question when I hear you talk about serious audit deficiencies and fraud, and as a regulator, that kind of goes right up my backbone. And I wonder how many of those people that you have discussed still maintain their licenses, because smaller firms, if we found that same situation, they would be called before our boards and they would be disciplined. And when we hear, to be real honest, when I hear that there's knowing deficiencies and our job is to protect the public, I wonder, is there some way at some point we can connect a little bit more so that we can, again, these people have licenses by the state boards, and even if they're disciplined by you, they're still operating under those licenses, and we're the only ones who can take the final disciplinary act on that. And I wonder if there's any way we're going to be able to work a little closer with you. Thank you.
Thanks for that comment and question. I share the same concern. And there are a lot of aspects to this. So we do send our inspection reports and our enforcement actions out to the states. And depending on whether your state has a confidentiality agreement with us, will determine when you get this information. So if you've not signed a confidentiality agreement, you get the information when it becomes public. If you have, you get it earlier. We've actually had some states change their mind about the confidentiality agreement because they'd rather deal with it when it becomes public, because there are a number of data protection actions that you would need to take. So all of the states get our inspection and enforcement information. We also sometimes give states a call because we actually find people who are out there operating without licenses. And so we'll inform you about that or anything else unusual. I am concerned sometimes when we do have egregious problems and we are sanctioning an auditor or an audit firm, and basically we can bar them from doing public audits, we can fine them, but if the states don't then take on that case and revoke the license, then that CPA can go ahead and audit not-for-profit entities, government entities, and private companies. And so where we do have some of these really egregious cases, I would highly encourage the states to go ahead and take action there. But we can't take away their licenses. We can prevent them from practicing in the SEC space.
Atkinson from the state of Texas A&M. Thank you again for being here and speaking with us today. We really do appreciate it. You have a tough job. I guess my question...
For saying that.
My question, and I didn't really mean it. I'm serious. No, I did. My question to follow on to Harry's is, we're sitting here in the room as state boards of accountancy members, or at least the bulk of us are. And we look at the slide number 22 that was up on the screen with the deficiency rates as they are labeled. And our question is, how can 1/3 of the largest firms in the country continue to practice in our states with that level of audit deficiency? And so the answer may take, some form of what the deficiency really is, what it really means. We need to have some level of sensitivity to that statistic because it should be alarming. Thank
Yes.
you.
And in fact, we're working to try to put context around that. Those rates are not generalizable. So those rates of deficiencies for the Big Four firms, that represents the percentage of those audits that we choose to inspect. So at each Big Four firm, we inspect between 50 and 60 audits per year, which is a very small sample, and we use a risk-based approach to determine which ones to inspect. And we sometimes call it a double risk bias. So we're looking for the risky audits and the risky areas in those audits. And some say, well, gee, that's not really fair because that is not a representative picture of the firm, and it is not. In order to get a representative picture, we could quadruple our sample sizes. I do think that once those rates come down, and there is some value in going in and targeting the really risky areas and trying to go ahead and get some of this remediated before it turns into a big problem, and that's been our approach. In the future, I do think we will have an opportunity to change our approach if those rates come down. It's very hard to justify moving away from that approach with those rates so high. I guess the change that we could do is add, and I would like to see us do more random sampling. We do a little bit of random sampling in the 50 to 60, but not enough to really allow us to conclude about what do things look like across the board. The other really important point here, though, is, when you look at the corporate failures that happened prior to the Sarbanes-Oxley Act, they were very big, but when you looked at the universe of public companies, they represented a very small portion of public company audits. It does not take very many large-scale risky failures to happen before the markets get shaken. So that is another reason why we really go in and look at the risky audit areas for now. But it is definitely a consideration, and I think everybody's getting tired of these percentages that just keep repeating. And I'm really hoping that based on the tremendous efforts that the firms are making, that we will see some drastic change in the near future. And we've seen that with one firm, and I hope that that trend can continue, not only with that firm, but that the other firms will show similar trends.
Well, thank you, Jeanette. It's been great to have you here. Really appreciate your traveling again, and the hardship of coming to Maui, and the dress and everything. But I believe you're going to be around for the rest of the day.
Yeah,
Right?
I'm going to take the extreme hardship of actually staying through Wednesday.
Okay.
So I'd be happy to chat with any of you during the course of the conference.
That was the point. Please take advantage of that great opportunity to visit with this talented lady, and I'm sure she'd be happy to try to answer questions that you have. I would also like to mention that this last July, that the NASBA leadership went to Washington, D.C., and we met with the entire Pcaob board, all 5 members, and their top leadership group. And going forward, we intend to keep that avenue of communication open, we're hoping to meet on an annual basis in a similar vein to really try to talk about those questions that were posed about
Right.
discipline and so on.
Yeah, and to really, remember that we committed to doing this annually and to really coordinate, on some of these issues and what do these problems mean? Because I understand how if you all sitting out here as state boards listen to some of this and get extremely nervous. And, we need to work together across organizations to figure out how to create a strong system that can have confidence lasting into the future. So I want to applaud all of you for what you do on a daily basis and for being here under the hardship conditions of Maui to continue to advance the agenda and the profession. So thank you very much.
Let's give Jeanette a hand.